It's Thursday, October 3rd, 2019. You know, you have to ask yourself, who would be buying in this environment today? Service sector down, manufacturing down, unemployment ticking up. Who would be buying in this market today? Is it the Fed? It's a possibility. What's interesting is that we saw a run to safety today. Even though the Dow Jones closed up 122 points with all this bad news, we continue to see a run to safety. Bond market plummeted today. I checked out some of the bond numbers here about 2 hours ago. 3-month is at 1.71. The 2-year is at 1.39. The 5-year is at 1.34. The 10-year is at 1.53. And the 30-year is at 2.0. They're all down. You have to ask yourself, where would these yields be today if the Federal Reserve was not injecting hundreds of billions of dollars into the banking system? And quite possibly, they may even be buying stocks in these markets to keep them propped up. Where would all this be without this manipulation? You got another prime example of market manipulation today, market rigging. They are controlling these markets. The Federal Reserve is controlling these markets. The real economy doesn't even exist now. The stock market is completely controlled by the Federal Reserve, and the Dow Jones got the news that it wanted today. The algos fired up with the news that that rate cut is over 90% going to happen this month. The question is, will it be 25 basis points or will it be a half point? Will we see a bigger rate cut coming? The markets know it's coming. It hit those algos today, and the Dow Jones coming from down 335 points in the hole, surges up 122 points at the close, all because of the news that the rate cut is going to happen in October. It's well over 90% now. It is 100% done, and these markets know it. You know, if the economy is doing so good, how come we're going to get another rate cut in this October? And how come these banks need hundreds of billions of dollars of liquidity injected into them? How come the Fed is buying stocks? If things are so good, how come we are seeing record amounts of manipulation and rigging in these markets? The economy now requires even bigger infusions of new credit and lower interest rates to avoid financial cardiac arrest. These markets are addicted to these injections and to this manipulation like crack. They cannot function now with reality. They cannot function on their own. These markets cannot stand on their own 2 feet without the help of the Federal Reserve stepping in every time there's a problem. Look, they're running out of ammo. We're getting closer and closer to 0% rates, and they are going to get themselves into very big trouble here. And in doing so, they've made these markets addicted to the drugs. And I believe we're going to see very hard times, and we're going to see a massive collapse because these markets are going to have a withdrawal when they can no longer get the drugs to function. Remember, we're close to zero, running out of ammo. The leeway is no longer there. What are they going to do when we hit zero? Is there the possibility of seeing negative rates here in the U.S.? They're expanding their balance sheet, injecting billions, hundreds of billions of dollars into these banks. The Fed is broke. The Fed is running out of basis points to drop. What are they going to do? I see big trouble ahead in these markets, and the Fed is getting themselves into very, very big trouble here. Jerome Powell told us that the past rate cuts, he called them recalibrations. He called them insurance. They're not working. U.S. manufacturing survey contracts worst level in a decade. U.S. gross national debt jumps by $1.2 trillion, now at $22.7 trillion. Growth hits the wall. Student loan debt soars to $1.6 trillion. The repo market is in big trouble. The banks are dependent now on liquidity, or they're not going to be able to function. Midwest faltering economies will spread across America. Treasury yields sink after U.S. manufacturing raises fears. So look at everything they've done, every tool they've used, every bit of manipulation, all the injections of money, low interest rates, corporate buybacks, and this is as good as it gets. Ask yourself, how bad it's going to be when they no longer can drop interest rates, when the Fed no longer has the hundreds of billions of dollars or trillions of dollars to pump into the banks. What's going to happen? The Fed is broke. The Fed is running out of points to throw at these markets. We're going to zero. We'll be at zero in 2020. Then what? We going negative? How far negative will we go? How much are you willing to pay the bank to hold your money? This is where we're going, ladies and gentlemen. They've used every trick in the book, and this is as good as it gets. We're in massive debt. The country's bankrupt. Unemployment is ticking up. Manufacturing is falling off of a cliff. The service sector, the biggest sector in the U.S., slowing down. The whole thing's been manipulated. The whole thing's been a giant illusion. And at some point, you got to pay the piper. Good article today on Zero Hedge regarding corporate buybacks. Corporate buybacks accelerated to their strongest weekly level since 2009. Corporate buybacks are now up 25% year over year. Third quarter to date, buybacks are up 39% year over year. Yet they're telling you that there's no manipulation, that these markets are sound, that they're real. These markets cannot stand on their own 2 feet without manipulation, without help of buybacks, without the help of low rates, without the help of cash injections and money printing. Stocks surged today as both PMIs now suggest that the U.S. is headed for recession. These markets don't care. The stock market is oblivious. It is solely dependent on the Federal Reserve and lowering rates. It is ignoring the warning signs. Do not be like the stock market. Do not ignore these warning signs. We see a result of companies buying every share of their stock that they can find with no price discrimination. So who's selling the stock? Corporate insiders are selling. CEOs, CFOs, board members, venture capitalists. This is who's selling the stock. Who's paying for this? The greatest fool of them all. The yield-starved corporate bond investor. Wolfstreet.com today. Carmageddon. Let's look at some of the third quarter numbers here. GM was up 6.3%. Ford was down 4.9%. Toyota down 1.2%. Fiat Chrysler was about flat at 0.1%. Nissan Mitsubishi down 4.9%. Tesla down 41%. Aston Martin, Ferrari, Lotus, and McLaren, they were up almost 38%. So, that 0.0001%, the people at the very top, the ones that are getting the help, these are the people that are able to buy, $200,000 and $300,000 and $500,000 cars. New vehicle sales are on track for 17 million deliveries in 2019. This is the worst level since 2014 and below the year 2000 when there were 17.35 million deliveries. Now it gets real interesting in the auto sector here. Auto loans. This is in Zero Hedge. I'm going to paraphrase through this article. 1/3 of all U.S. auto loans issued today are stretching to 7 years. A decade ago, 7-year loans only made up about 10% of all loans. Now they're making up around 33%. The longer loan duration are a clear sign that the American middle class is growing broker by the day. Isn't that the truth? And this gets very interesting here. Dealers are at the point where they make more money on the loans than they do on the cars they sell. Most buyers won't ever pay off their debt before trading their car in for a new one. And when they do that, they're taking on more debt. Only 18% of American households have enough liquid assets to cover the cost of a new car. I mean, this is really concerning. The average loan now today stretches 69 months. This is now a record. Dealers are giving record incentives to get those 2019 vehicles off the lot. So when we look at General Motors sales being up, they're doing everything they can, including throwing the kitchen sink at giving you incentives to get these cars off the lots. This year, dealers make an average $982 per new vehicle financing versus $381 per vehicle on the actual sale. A decade ago, they made $516 per car on financing versus $837 on the sale. So absolutely amazing how things have changed. Some more concerning things that you need to know about and be preparing for. Americans spent more on taxes in 2018, than they did on food, clothing, and healthcare combined. But of course, your friends are telling you there's no recession coming. How long can the consumer keep propping this economy up when they are absolutely tapped out, and they're getting more tapped out? This whole economy now is reliant on the consumer and the consumption and the debt borrowing of the consumer. How long is this going to stay propped up? Ladies and gentlemen, I don't think it has much longer to go. That doesn't mean that it can't go another year or two. It could possibly do that. But we are seeing some very severe indications here that things are getting very, very worrisome. When we look at an article here on dailymail.com, $1,050 a month to live in a shed in San Diego, 200 square feet. The property realtor demands potential renters have a credit score of 650 or more. This is what it costs now to live in San Diego. And when we look at what's happening up in the Bay Area, Silicon Valley area, the price of rent is absolutely soaring. How is the consumer, how's the average Joe going to continue to survive? Employee morale at Uber decimated as company slashes jobs, cuts office perks like coffee. Again, this is the service sector. This is the average American now working that second, third, fourth side hustle, working for Uber, working for Lyft. They can't even give them a cup of coffee now. Unbelievable. That's on Zero Hedge. Zero Hedge also. And it begins. Kroger lays off hundreds amid failed turnaround. AI is replacing these jobs. Technology, automation is replacing many of these jobs. They said that if the 2020 recession hits, this could result in more layoffs at Kroger. Things just continue to not look good, yet most people are not preparing. Here's a crash alert also on Zero Hedge. 23 California cities where home prices are already dropping. And these are areas where prices were surging not that long ago. Now, they are dropping. More indications that things are slowing down. Manhattan home prices dropped 8% in the third quarter, largest slump since 2011. Again, so as we spoke on past videos, we are starting to see the effects starting at the top and working its way down. It will affect those lower medium price homes. Global demand glut crashes De Beers September sales. No surprise, diamond sales are getting hammered. We're watching the luxury retail sector get smashed. We're watching the lower median retail sector get smashed. Everything is getting smashed. We're watching, areas in Beverly Hills, LA, Manhattan, New York, the Hamptons, prices coming down, days on market rising, more properties piling up, more listings piling up. And sales slowing in these luxury markets in Miami, parts of Florida. We're seeing a slowdown, and this time it started at the top and it's trickling down. And we're going to see the slowdown continue to affect these lower medium price homes. So one last article today. China unveils doomsday bomb. This is, I think, the DF-17 hypersonic missiles. This is happening while the U.S. military concentrates on diversity. We are really watching some real scary things happen here in America, politically, socially, financially, and militarily. And our military is so worried now about being politically correct and being so diversified while the rest of the world is advancing, while China is developing these hypersonic missiles that can hit anywhere in the US in under 30 minutes. We're worried about being politically correct while China continues to evolve this technology to become a more powerful military. Really concerning. I want to close with one more thing, and it's this. As I've said multiple times in numerous videos, I believe we are witnessing spiritual warfare taking place right here in America. Many people still want to associate with people in darkness. You need to make a decision today on what side you're going to be on. Are you going to associate with darkness, or are you going to associate with the light? Too many people want to continue to associate with the darkness. Right now, you better be surrounding yourself with friends and people in the light. I truly believe that we are in spiritual warfare, and that we are going to see supernatural things take place here in America. Good versus evil. Do you still want to associate with the darkness, or are you going to associate with the likeness? Start picking out the right people that you're associating with. You need good people surrounding you, not darkness. Pick the light. Pick people who are living good lives. Pick people who are living in the light. God bless every one of you. We'll talk very, very soon. Have an incredible week. God bless America.